In this video, I'm going to teach you how the top 3% of traders trade, and specifically NQ. Okay, so today I made $1,000 in a couple of minutes. All right, it just took a couple of 1-minute candles, and that was pretty much it. I took my entry here. You can see the precision, and I took my profit inside this fair value gap. I took another trade, but then I got stopped at break even. So that was 1K day for me. Now, I'm going to break down each and everything in this video. So first off, we're going to start with identifying daily bias. We need to know where the daily candle is going to expand towards, right? And then we're going to be looking at our entry models and identifying the right liquidity levels, so you don't get like faked out. You don't get a fake liquidity sweep and then you get stopped out. All right. So before I start, my name is Faz and I've been trading for more than 6 years now. And I am currently funded with 5 prop firm accounts, and I've helped hundreds of my students get funded and get their first payout. And most of my students are getting, $10,000 to $20,000 per month payouts from prop firms. So this is like the best opportunity for you if you really want to make money with these markets, because you don't have to use your own capital. And once you have the skill set, you can get a prop firm challenge, pass it, and then you can scale and make $10,000 to $20,000 a month easily. Okay, but with this model, what I'm going to teach you right now in this video, that is going to be all you need, because that's like the entire foundation of taking good trades. Okay. So without wasting any more time, I'm going to hop onto the daily time frame, and I'm going to teach you what I look for to identify my daily bias. And then step by step, I'm going to teach you everything about this model. Okay, so now I'm on the daily time frame, and when we are trading on the 1-minute time frame, we don't really need to care about daily bias, but it is a very good habit to identify where we at on the daily time frame, because that can have some influence on your 1-minute trades. Okay, and let me explain and you will understand what I mean by it later on in the video. All right, so the way I identify the daily bias is very simple. Now, I have mechanical ways to identify daily bias, but this one, it requires some experience, and I'm going to try to teach it right now. Okay, so the very first thing that you have to do is look where price is at on the daily time frame. Are we inside of a PD array? Are we inside, have we swept any liquidity right on the daily time frame? Now, when I look at here, over here, what we have here is a gap. Okay, so gaps, volume imbalances, fair value gaps, order blocks, right? Inverse fair value gaps. These are all PD arrays, and if price is inside that PD array, you can expect the price on that day, this specific candle, to push up. Okay, because right now, if we do the the complete analysis, you can see that we have this liquidity pool over here. Okay, and then we also have these equal highs on the daily time frame, right? So the short-term bias, right, for this day specifically, it can be bullish. Okay, but long term, what I'm looking at is that we had this volume imbalance, we broke above it, but then we rejected back off. Right, so what it tells me that we could potentially, and I'm not predicting, I'm reacting. Okay, so I don't know if price is going there, but I'm assuming that in the upcoming days, price will take out this liquidity and then start pushing up towards these equal highs. Because if you look in the past, we had a higher high, higher low, and higher high, but then we swept this low over here, right, to push back up again. So price needs liquidity to push towards its original destination. But now when we look at a short-term bias on the daily time frame, we can see that we are in this gap, and specifically this day is what I assume is going to be bullish. Okay, now I could be wrong here, but that's the thing about daily bias. All right, you just have to put your experience into play. Okay, so this is not a mechanical method, but right now when price is inside this gap, I can expect some form of pullback up there, and you can see how price pushed up here, right? But then again, this is just to get the idea of where this day can expand towards. Now, this is step 1, finding the daily bias. Okay, so the next step is that I drop down to 1 hour time frame, and you can see this is the new weekly open gap over here that we marked out before on the daily time frame. And when price dips into this level, what I'm looking for is a sell side liquidity sweep on the 1 hour time frame, or a 15-minute time frame, okay? But right here, what you can see is that we build liquidity over here, right? And since our bias is bullish, when our bias is bullish, we look for sell side liquidity sweep first, and then we look to target the buy side. So we look for sell side sweep inside a daily time frame PD array, right? Our bias is bullish, so that's why we look for sell side liquidity sweep. Now, when we get that, right, then we can anticipate that price will move towards these short-term highs over here on the hourly time frame. Okay, so that is step 2 when we are inside the daily time frame PD array, and that is me framing my intraday bias. Okay, we have the daily bias, but now what's happening on the 1 hour time frame? We need to know that as well. So as I said before, we wait for price to engineer some form of liquidity inside that PD array, and then we look for sweep of that liquidity towards the equal highs, short-term equal highs, or some form of inefficiency or fair value gap. Okay, I hope that makes sense. Now, when we have liquidity sweep, then we can drop down to even lower time frames. Okay, so the next element of this model is the time itself. Okay, so time is very important. Okay, so when we had this 1 hour sell side liquidity, right, you can see we have the 9:30 open right here. Okay, so we had the open, we dipped below, and then we pushed up towards these equal highs over here. Okay, so if you pair time with price, you have a phenomenal model. Without time, price is nothing. Okay, and without price, time is nothing. I hope that makes sense. Okay, so ideally, what I mean by what I'm saying is ideally we want to see the sweep of that liquidity that we engineered before inside the daily gap. We want to see liquidity sweep at 9:30 open, the 9:30 Judas swing, because when the market opens, it's first going to manipulate and then it's going to expand. So basic accumulation, manipulation, and distribution towards these equal highs. Now, I wasn't on the charts at this time. So if I go to so now the next step, very simple stuff. We drop down to 1 minute time frame. Okay. And that's when we get the liquidity sweep. This is the opening price. We push towards that. We know that our bias is bullish, right? So we got a sweep here as well, but we are not going to take any trades here. We know that the 9:30 has opened just around here and our bias is bullish. So we get a liquidity sweep right here, right? And then my ideal setup, as I said before, I wasn't on the charts. What we can do for our entries is look for inverse fair value gap formations or simple market structure shift with a fair value gap. Okay, but over here where you can see we informed a very small inversion here, and after the manipulation we inversed back right above it. So this could have been the ideal entry for me, but as I said before, I wasn't on the charts, right? And you can see how beautifully this trade played out. So over here we had a fair value gap as well. You could have taken your entry, and when you have a clear target, each and every single PD array is going to be respected because price has one goal, and it is to seek liquidity towards these highs over here. Okay, very simple stuff. Now, why did I take my entry over here? So let me just go and turn on my executions, right? Why did I take my entry over here? Okay, so let me go to the 15-minute time frame, and let me just turn off the executions as well. So right here, even though price has already moved towards the liquidity that we marked out, what I looked at is that we had this auto block, okay? So over here, what you can see, this candle specifically took out liquidity, right? So we can mark this out as our auto block. Now, what I also saw that we had some form of inefficiency over here, okay? So a fair value gap over here. So now we have this area, and I know that if price wants to reverse from this level, price will go towards this fair value gap, or at least, or worst case scenario, reverse from the 50% of this fair value gap over here. But when price was here, what I looked for is a simple entry model. Okay, I wait for price to engineer liquidity inside the PD array, just like the daily PD array. What I did on the daily was I marked out the daily gap, and then I waited for price to engineer liquidity inside that daily gap on the 1 hour time frame. Now, similarly, when price tapped into this 15-minute auto block, right, I waited for price to engineer some form of liquidity over here. And when price swept that liquidity, right, what I first looked for was a change in the state of delivery. So this candle specifically took out this low over here. And when price closed above the body of this candle, right, that swept liquidity, and of course when price closed above it, we have a change in the state of delivery. Now, one more confluence that I had is that we inversed this fair value gap. We closed above it, and we have this inversion over here. Now, the next step, I took my profit somewhere around here. So if I turn on the executions here, right, I took my entry here, and I took my profit around here. I made $1,000, and that was. Now, why did I take this break-even trade? Because I know for a fact that price will now reverse from here, because after 9:30 a.m., we had that expansion to the upside. The 9:30 did the manipulation move, and then we had expansion, right? Now, a little juice was left, so I took this entry over here. Ideally, as I said before, this would have been my entry, but I was busy. But then here, I took this beautiful trade, literally zero drawdown. You can see we tapped here, boom, out of the markets. Now, I got close at break even here, but I'm telling you right now, if I didn't go break even, this would have hit my TP as well. Because I'm using logic, I'm not using entry patterns, I'm not using patterns, I'm not pattern trading. I'm using my experience. I'm using my experience with the charts that I have, gained in the last 6 years or more. And that comes from practice, identifying. So in simple words, on the daily time frame, what you want to do, where we at and where we could possibly go. If we are inside a PD array, right, and there is, let's say, a liquidity level over here, we can potentially move towards that liquidity level here from this PD array towards equal highs, right? And that's how you basically frame your daily bias, intraday bias. It's very simple stuff, and you kind of get used to it. So the entry model that I use is change in the state of delivery or inversions. So if there were multiple fair value gaps inside this leg, I would wait for price to inverse all of those fair value gaps, and then I would take my entry. But since there was only one fair value gap here, I took my entry, and that was beautiful. Now, let me give you guys a couple of more examples so you guys understand this model correctly. Right, so here is another example, right? So we start on the daily time frame. What we see here is we have dipped into this fair value gap, and we have swept all the sell side liquidity, right? Now, we go from PD array to PD array. So over here, what we have is this auto block. Ideally, you would mark the body, but just to be on the safe side, because we never know what price will do, okay? So we want to be on the safe side. We want to play safe. So when price dips into this fair value gap, the next step, as I told you before, what we do is we drop down to 1 hour time frame, okay? Now, when we are here, right, what we do is we wait for price to engineer liquidity inside this PD array before 9:30 open, okay? So right now, what you can see, we have engineered this low over here before 9:30 open. And look at this now. Okay, let's just go here. At exactly 9:30 open, I'm going to go to the 50-minute. We have swept this liquidity. Also, we have these equal highs over here. Literally the simplest model that you can use. Okay, so now if I go to the 15-minute time frame to identify liquidity and see what's happening, right? We took out this liquidity, we took out Asia low, right? And we swept this liquidity. This is the 9:30 opening right here. So let's mark up the opening price. Then let's just go to the one. Now on the 15-minute time frame, you don't have to do much except identify key liquidity pools that price can go towards on the 1-minute time frame. So we have these clean equal highs over here, right? We took this out. We can also potentially target this high over here on the 1-minute time frame. Now let's go to the 1-minute time frame. This is the opening. Price manipulates to the downside. Look at the crazy precision, guys, that I'm teaching you right now. We took out the liquidity that was built inside the daily PD array. This is very important. I've said this multiple times in this video. Okay, now what we are looking for is a formation of an auto block or inversion. Okay, so this candle, look at this candle specifically, it took out this liquidity over here, this candle. So now if I want to consider a change in the state of delivery, I want the price to close above it. Now that's one rule, okay? But then you can also look that if we have inversed all of the fair value gaps inside this dealing range, from this dealing range high to this dealing range low. Okay, so that gives me more confidence that price can now, push towards these equal highs over here and further. Then what I would simply do is when we have the change in the state of delivery, I would take my entry on the retest of that candle. I can put my stop somewhere around here, and then I can go for 1 to 2 or 1 to 1.5, right? And you're gonna see how this plays out. Boom, right there with insane precision. Now, I use this model in my private group. I trade every single day with the members. And if you want to learn how to actually trade like the top 3%, right? I have recently launched my one-on-one mentorship. It is limited for only like 5-6 people because I want to focus only on 4 or 5 students at the moment, and I want to give them my time. Like 24/7, you will have access to me, and I'm going to teach you my models that I've never revealed before. You can look at this. This is experience. I'm going to teach you my entire experience in that mentorship. But as I said before, spots are limited, right? You can hop on right now. And I trade every single day live with this model, this exact model. And I promise you, you're going to pass your challenges guaranteed within the next 6 or 7 weeks after you join. Okay, so spots are limited. If you're interested, there are links in the bio. Click on them and let's change your future. So that would pretty much be it. And just before I end the video, you will also get like my entire course when you join. You will get like one-on-one mentorship from me. You will get like live trading every single day. You will get signals every single day, swing trading signals, and a lot more. Like, I'm gonna be yours, okay? And the reason why I'm promoting it so much, because I've been getting a lot of requests since I started this YouTube channel that, we want to work with you one-on-one. But I just knew that I didn't have the time, okay? But now I'm only taking a few students and I want to teach them my ways. So if you're interested, click the link below and we will see if you even qualify. If you're not qualified, then we might not take you in. So thank you so much for watching. I'll see you guys in the next one.